Hi everyone, and welcome to today's morning report with me, Richard Perry, markets analyst at Hantech Markets for Friday the 11th of April. The handover that we've had from the US and Asian sessions has been fairly disappointing, pretty dour for opening for the European trading, certainly on the stock markets anyway. The FTSE's down around 0.7%, as is the DAX and the CAC, so much weakness early on, following on from sharp losses on Wall Street overnight. That came despite the strong improvement in weekly jobless claims that was significantly better than expected, and the Wall Street markets fell around about 2% on the S&P, but the Nasdaq, the technology index, fell over 3%, which was its largest decline, one-day decline since November 2011. This has shown a big flight to safety that we've seen, and that we've actually seen in the currency markets as well. Certainly with the strengthening of the yen in recent days, and that's certainly that yen strength has also hit the Nikkei in Asia as well. So sharply down on the Nikkei as the exporters face a stronger yen currency. The moves for today, in fact, the economic data that we've got or had out overnight, certainly the inflation data for China and Germany, were both in line with expectations. China coming in at 2.4%, Germany at 1.0%, and I'll just give you a show of that now, where this is the China data that just does actually suggest that Chinese inflation is fairly stable there, but the German number is significantly still under pressure. It's continues to fall away, and it's lowest since 2010. That was just a confirmation of the initial flash number that we had for March, but still, that does show the extent of the weakness that we've seen. The VIX, I will also show you, that's sharply higher. And that has been flying around the last few days. That just shows the stress levels that are fairly elevated on the S&P and equity markets at the moment generally. So it does suggest that these equities are under pressure, and it seems to be the theme of the moment. Today's data that's due out is not really anything further in the morning of the European session until the University of Michigan University of Michigan sentiment at 2:55 this afternoon UK time. Expected to come in at 81, slightly higher from 80.0 last time out. The chart of the day that I'm looking at goes alongside that VIX chart. It's the S&P 500, and the S&P 500 had a sharp decline, as I said yesterday. Now below, this is on the daily chart, below the 1834 support. It closed yesterday at 1833. So that now takes us to about a 7-8 week low on the S&P. But basically, this is the chart of the day because I'm showing this because I don't think it's necessarily such a bad thing at the moment. I think this is just a nice unwinding of this primary uptrend. You've still that's in place. This actually goes all the way back to the bottom in 2009. So you've seen this primary uptrend flanking this move all the way higher, and that currently comes in around about 1800. So you'd suggest that any correction is still a longer term buying opportunity on the S&P 500. That the very strong daily candles that we've seen, these three big long black candles in the last 5 days. It's quite reminiscent of actually the trading in towards the end of January, I think. So just and that proved to be a very strong buying opportunity for further gains towards the highs once more. So you've got this support around 1813 to 1815 that comes in, and that is also just under where we are at the moment. So ultimately, I still think this could be just another opportunity to buy. You've got all these momentum indicators that are not actually anything more than really corrective at the moment. They've not sharply deteriorated. The RSI is just around 40, which is not hugely bearish. Certainly, the MACD lines are still above neutral. So again, these indicators on the technicals certainly suggest that this is just a near-term correction still within the larger uptrend. So that is what I'm thinking at the moment. This is the intraday chart. You're not a million miles away from being a little bit oversold on the intraday level. So you're back towards 30, which is around about where the S&P has formed support throughout this trading range. I mean, yes, I suppose you have broken below the support of that trading range, but you're still not excessively bearish yet, as I said on that daily chart. So perhaps there is the prospect of this becoming a little bit oversold near term and a technical rally coming in. So we'll watch out for that. But for the upside, the resistance on the upside yesterday was 1872 that we need to watch, and the initial break on the downside, 1824 is the resistance there. And then that comes in at 1815 as well from the daily chart. So I wish you good luck in your trading today. Equities are lower, as I said, but slightly forming arguably a little bit of support, and we'll see what happens in the European session. But that's my outlook for today. Thank you very much, and I'll speak to you later.